All right, everyone. We're kind of switching gears today on Talk Tickers. We usually like to dive deep into earnings calls.
Right?
But some breaking news just caught our eye. We had to deep dive into this.
Yeah.
Databricks. This data and AI powerhouse.
Right.
They're about to get a massive cash injection.
Huge.
We're talking billions.
Wow, yeah.
Potentially pushing their valuation to a staggering $55 billion.
And the thing is, they're staying private.
That's wild.
Usually a valuation like that, you have Wall Street just clamoring for an IPO, but Databricks, they seem to be playing a different game.
Exactly. So we've pulled together a bunch of sources, CNBC, Reuters, Merger Market, even some info on their previous funding rounds. And we want to figure out what this move means for Databricks, for the tech world, and maybe even uncover a hidden gem for some savvy investors out there.
Yeah, definitely sounds like a plan. So before we get into the nitty-gritty, maybe like a quick refresher on what Databricks actually does.
Right. Not everyone lives and breathes data like we do. Databricks was founded back in 2013.
Okay.
And they've been on like a rocket ship ride ever since.
Totally.
They basically provide the software backbone for companies to make sense of their data, build AI solutions.
Right.
Think of them as the masterminds behind those data-driven insights that are changing how businesses operate.
Yeah. And they're not just serving like the small fries either.
Oh, yeah.
No, their client list includes some serious heavy hitters. Everyone from AT&T to Walgreens
Oh, wow.
relies on Databricks to like some degree.
Okay, so back to this funding round.
Yeah.
Not peanuts. We're talking somewhere between $5 and $8 billion.
Huge.
And here's the interesting part.
Okay.
Most of this is going to come from secondary share sales, meaning early investors and employees are going to have a chance to cash out some of their stake.
Which is interesting because remember, Databricks was already valued at $43 billion after their last funding round just last year.
Yeah.
So it begs the question, why raise more money if they're not exactly strapped for cash?
It's a head scratcher, right? And on top of that, why not go public with an IPO?
Yeah.
With a valuation like that, they could potentially be worth even more on the open market.
You would think so.
Right.
Well, some sources point to Databricks CEO Ali Ghodsi's long-term vision. Yeah. He's on record saying he's focusing on the company's success over the next decade or two.
Wow.
Not just chasing a quick IPO pop.
Which, when you look at the current market, makes a lot of sense. Software stocks have been taking a beating lately, and some recent IPOs haven't exactly been home runs.
Totally.
Right.
Yeah, staying private lets Databricks avoid that volatility and the pressure to constantly deliver short-term results to impatient, public market investors. They can focus on building something truly game-changing without the distraction of quarterly earnings reports and stock market swings.
Okay, that explains why they might not be jumping at the IPO opportunity, but what about the massive funding round?
Right.
They clearly don't need the money to keep the lights on.
Well, you've got to consider the human element here. Early investors, employees, they've poured their time and resources into making Databricks a success.
Right.
They might be itching to see some return on that investment. This mega funding round, with its emphasis on secondary share sales, lets them cash out a bit while still, keeping skin in the game.
It's a clever way to keep everyone happy. Reward those who took an early bet on Databricks while staying laser focused on building for the future.
Exactly.
And here's where it gets really interesting.
Okay.
This isn't just a Databricks thing. We're seeing more and more unicorns, those privately held companies valued at over $1 billion, choosing to stay private longer than ever before.
It's almost as if the traditional IPO is losing its luster.
Interesting.
Think about Stripe. They're reportedly aiming for a $70 billion valuation through a similar secondary share sale. And OpenAI, the brains behind ChatGPT, just raised $6.6 billion at a $157 billion valuation.
That's crazy.
It's a whole new world out there.
Yeah, it's like the IPO playbook is being rewritten right in front of us.
Companies are realizing that staying private longer can give them a strategic advantage, especially in a volatile market like this.
So what does this shift mean for investors who are eager to get in on the ground floor of these high-growth companies?
Right.
Are we locked out of the game until they finally decide to go public?
Not necessarily.
Okay.
There are still ways to potentially gain exposure to these private companies, although it might require some creative thinking.
Okay. I'm intrigued.
Okay.
Let's put on our speculative hats for a moment.
All right.
Brainstorm some kind of out-of-the-box ideas.
Okay.
What if we could find a way to tap into Databricks' success without waiting for an IPO?
Okay.
Remember, this is Talk Tickers.
Right?
And sometimes we like to explore the wilder side of the market.
I like it.
So,
All right, game, let's hear what you got.
what if we look for publicly traded companies that have already invested in Databricks during previous funding rounds?
Hmm.
We know companies like Nvidia, Capital One, and Andreessen Horowitz are already backers. If Databricks keeps growing at this pace, their stake in the company could become incredibly valuable.
It's a clever strategy, almost like a backdoor entry into Databricks' potential.
Right.
But we need to be realistic here.
Okay.
Those companies are massive
Uh-huh.
and diversified.
Right.
Their investment in Databricks is probably a tiny fraction of their overall portfolio.
Yeah.
It's unlikely to move the needle significantly for their stock price.
True, but it's still an interesting angle to consider,
Sure.
especially for investors who are bullish on Databricks' long-term prospects.
Right.
It's a way to get some indirect exposure without having to wait for an IPO, which
Yeah.
who knows when or even that'll happen.
It's a high-risk, high-reward scenario.
Right.
You're essentially betting on the success of both Databricks and the publicly traded company that holds their shares.
Yeah.
And you're right, there's no guarantee that Databricks will ever go public.
Uh-huh.
They could decide to stay private indefinitely, or they could get acquired by a tech giant.
So many possibilities. Of course, everyone, this is just a thought experiment.
Of course.
We're just spitballing here,
Sure.
exploring some possibilities.
Right.
This is definitely not financial advice.
Of course not.
Do your own research, consult with a financial advisor, and make informed decisions based on your own risk tolerance and investment goals.
Couldn't agree more. Speculation is fun, but responsible investing is essential.
Absolutely.
Now let's zoom back out for a minute.
Okay.
What does this all mean for Databricks and the broader tech landscape?
Well, their decision to stay private while raising billions is a sign of the times.
Yeah.
It shows that the old IPO playbook is no longer the only path to success.
Right.
Companies are prioritizing long-term growth and strategic flexibility over the allure of a quick public market debut.
It's a bold move.
Yeah.
A statement that says, we're building something special here and we're playing the long game.
Mm-hmm.
But it also raises a lot of questions about the future of the IPO market and the role of private capital in fueling innovation.
Are we witnessing a fundamental shift in how companies grow and access capital?
Right.
Are IPOs becoming less relevant?
It makes you wonder.
And what does this mean for the average investor who wants to participate in the next wave of tech giants?
Yeah,
These are questions we'll be grappling with for years to come.
absolutely. Databricks' story is just one chapter in a much larger narrative about the evolving relationship between technology, finance, and the public markets.
So where does this leave Databricks? They're clearly a dominant force in the data and AI space, but their future is far from certain.
They're a company to watch, that's for sure.
Yeah.
They're pushing boundaries and challenging conventional wisdom. Their success or failure could have a ripple effect throughout the entire tech ecosystem.
Will they eventually go public?
Right.
Will they get scooped up by a tech giant?
Yeah.
Or will they forge their own path as a private behemoth rewriting the rules of the game?
Who knows?
Only time will tell.
One thing's for certain, Databricks is a company that's not afraid to take risks and chart its own course.
Definitely.
And their story is just getting started.
So there you have it, Talk Ticker listeners. We took a detour from our usual earnings call deep dives to explore some breaking news that has the potential to reshape the tech landscape.
We unpacked Databricks' bold move to stay private while securing a massive funding round.
Right.
We explored the changing dynamics of the IPO market, the allure of secondary share sales, and even tossed around a speculative trade idea for those who are feeling adventurous.
But remember, this is not financial advice.
Right, do your own research.
Consult with a financial advisor and make informed decisions that align with your risk tolerance and investment goals.
Absolutely.
Knowledge is power. The more you understand about the forces that are shaping the market, the better equipped you'll be to navigate the complexities and capitalize on the opportunities that arise.
Thanks for joining us on this deep dive.
We'll be back soon with another Talk Tickers episode, diving back into the world of earnings calls and uncovering the hidden gems that can help you make smarter investment decisions.
Until then, keep those tickers moving.
Yeah, it really makes you think.
It does.
Is this a sign that the IPO as we know it is like on the way out?
Uh-huh.
Will we see more and more companies choosing to stay private longer, operating in like this sort of shadow market that's only accessible to a select few?
Right. And what does that mean for the average investor who's trying to get a piece of the action? It's a
Yeah.
fascinating dilemma.
Yeah.
On the one hand, you've got these incredibly innovative, high growth companies that are potentially reshaping entire industries,
Right.
but they're operating outside the traditional public market framework.
It's almost like we're seeing a new kind of financial ecosystem emerge.
Yeah.
One that's less about quarterly earnings reports and stock ticker volatility and more about long-term vision,
Right.
strategic patience,
Yeah.
and building value outside the glare of Wall Street.
It's exciting and a bit unsettling at the same time. Like,
Yeah.
we're used to having access to information, being able to track a company's progress through public filings and market performance. But this new breed of private giants is operating under a different set of rules.
It's definitely a shift.
Yeah, and it'll be interesting to see how regulators and the broader market adapt to this new landscape.
Right.
Will we see new regulations emerge to govern these private behemoths? Will traditional investors find ways to gain access to these private markets? Or will a new breed of investor emerge?
Right.
One that's comfortable with the risks and rewards of investing in companies that are operating outside the traditional public market system.
Lots of questions.
Right.
Not a lot of answers.
But that's what makes this so fascinating.
Yeah,
We're witnessing a real-time evolution of the financial markets.
definitely.
And the outcome is far from certain.
Well, Talk Tickers listeners, we've reached the end of our deep dive.
It's been
We started by switching gears from our usual earnings call analysis to tackle some breaking news about Databricks and their massive funding round.
We explored why they might be choosing to stay private, the potential implications for the IPO market, and even tossed around a speculative trade idea for those who are feeling adventurous.
But remember, this is not financial advice.
Of course not.
Do your own research,
Absolutely.
consult with a financial advisor,
Yes,
and make informed decisions that align with your risk tolerance and investment goals.
knowledge is power. The more you understand about the forces that are shaping the market, the better equipped you'll be to navigate the complexities and capitalize on the opportunities that arise.
Thanks for joining us on this deep dive.
Absolutely.
We'll be back soon with another Talk Tickers episode, diving back into the world of earnings calls and uncovering the hidden gems that can help you make smarter investment decisions.
Until then, keep those tickers moving.